Hello everyone, welcome back. In our last class, we were discussing about Kerala Accounts Code. So let's continue. Cash balance in separate consolidated or contingency funds and public accounts of India and state are either held in a government treasury or kept with bank. The receipts and payment of money on behalf of a state outside its jurisdiction are ordinarily arranged through Accountant General of the state in which the transaction takes place. But the government of Jammu and Kashmir have not so far entered in the agreement with RBI for the conduct of their general banking business by the bank. Each branch of RBI keeps a separate account, one for central government and other for the state government. Separate statements of transaction in their central government and state government accounts with supporting vouchers are transmitted by each branch of the bank daily to the treasury officer or to the accountant general. At the close of the At the close of every month, the balance of two accounts are transferred to central account sector of RBI Nagpur. Payment to defense pensioner passes through treasury account. Article 10 is followed in respect of railway, post, telegraph and defense transactions taking place at the branch of the SBI. And the General Clearing House for the adjustment of transactions between different governments in the Central Accounts section of RBI Nagpur does all the clearing activities. Article 283 provides that money may be received and payments may be made on behalf of the central government and other state government by a state treasury where the treasury business is not conducted by the bank. Cash balance held in treasuries of central government form part of consolidated fund, contingency fund and public accounts fund of India. At the beginning of each month, the accountant general receives from the treasurer under his jurisdiction monetary accounts supported by the requisite schedules, vouchers, etc. of the transactions which took place in the treasury during the previous month. And the annual accounts of each state government and the appropriation account are submitted to the government of the respective state in pursuance of the provisions of paragraph 11.4 of of Audit and Account Order 1936. Annual account is also known as financial account and it's prepared by each state accountant general as soon as the March financial account are closed in the prescribed form and submitted to the CAG for approval and transmission to the governor of the state concerned. The financial account of central government, which are required to be submitted by the controller and auditor general to the central government under the provision of Audit Act Order 1936 are prepared by the Accountant General Central Reserve. Now let's see what is meant by General Financial Statement. General Financial Statement is also known as Combined Finance and Revenue Account of the Central Government, State Government of India, and it prescribes the transactions of all the government sides, side by side, clarified under several major or minor head of account classification. Next is pro forma account. The operation of some department of government include undertakings of the commercial or quasi-commercial character. Here also it's important to know the financial results and cost of the service accurately. So, maintenance of suitable capital, manufacturing, trading and profit and account, etc. are usually kept on a pro forma basis outside the general account of government. Certain pro forma account relating to irrigation, navigation, embankment, drainage projects, and government residential buildings are required to be prepared by civil account officers. Local ruling under Article 19 says that in the state of Kerala, pro forma account, that is manufacturing, trading, profit and loss, etc., are maintained outside the regular government account for the following commercial departments like the PWD Engineering Workshop Trivandrum, the textbook department, irrigation schemes and projects for which revenue and capital account are kept, the state water transport department, model coir factory Bepur, bleaching and calentering plant Papanam Code. Now let's see what is journal and what is ledger. The accounts of government are based in the main on the single entry system and double entry system and is applied only in regard to the maintenance of a set of technical account called the journal and ledger. The main purpose of journal and ledger is to bring out by scientific method the balance of accounting in regard to with government acts as a banker or remitter or borrower or lender. The accuracy of it can be guaranteed only by a periodical verification with the balance brought out in the double entry accounts. Okay, now let's see what's the meaning of period of accounts. The annual accounts of central, state, and union territory government, which the Comptroller and Auditor General is required to render, shall record transactions which takes place during a financial year running from 1st April to 31st March. What are the different forms of accounts? We have already discussed this. Forms of accounts are three types: consolidated fund, contingency fund, and public accounts. In part 1 of accounts, there shall be two main divisions: revenue, revenue and capital. Under revenue, revenue consists of sections for receipt heads and expenditure head. And the second part, capital, public debt and loan, etc., consists of sections of receipt head, expenditure head, and public debt, loan and advances. Okay, the transactions shall be grouped into sectors such as general services, social and community services, economic services, etc. The sectors are subdivided into major heads or accounts. The sectors are in addition subdivided into subsectors. Subsectors before division into major heads of account. Sectors shall be distinguished by a series of letters of alphabet separately for revenue receipt section, the revenue expenditure section, and remaining sections or divisions. Each major head is allocated a code number which consists of 3-digit Arabic numeric code. The first digit indicates the section to which major head pertains. That is, revenue receipt section, revenue expenditure section, capital receipt section, capital expenditure section, public debt, loan, and advances, etc. The next two digits indicates the functional major head and remains the same for the major head, denoting the same function occurring in several sections included in the consolidated fund. The receipts major head on revenue account are assigned the block of consecutive serial numbers from 0020 to 1999, and the expenditure major head on revenue account the block from 2011 to 3999. The only capital receipt major head has been assigned the code number 4000. The expenditure major head on capital account are assigned the code numbers from 4011 to 5999, while the major heads and the public debt are assigned the code number from 60001 to 6010. The major head under loan and advances, interstate settlement, and transfers to the contingency fund are assigned the code numbers from 6011 to 7999. The only major head, contingency fund part 2, contingency fund is assigned the code number 8000. The major heads, the public accounts, are assigned the code from 80001 to 8999. For example, medical and public health. It's assigned, it comes under the major head 0210. And the major capital head is 2210, medical and public health. Okay. Okay. Now, what do you mean by major, minor, and detail heads? The main unit of classification in accounts shall be the major head, which shall be divided into minor heads, each of which shall have a number of subordinate heads generally known as subheads. The subheads are further divided into detailed heads. Sometimes major heads are also divided into sub-major heads before their further division into minor heads. The sectors, the major heads, minor heads, subheads, and detailed head together constitute a arrangement of classification structure. In determining the subheads, the following guiding principles should be observed. Homogeneous schemes under a program, especially those involving small outlay, should be grouped into suitable subheads. The subheads should not be multiplied unnecessarily. New ones are to be opened only when it is necessary. In certain cases, the grounds for opening specific subheads below the minor heads have been indicated in the general directions in the list of major and minor heads of account and in the various notes below the major heads in the list. These directions should be followed whenever it's necessary. The detail head, the fifth and the last tab of the classification, consists the object classification. On the expenditure side of account, particularly in respect of the accounts, head of accounts with the consolidated fund, the detail head are primarily meant for itemized control of the expenditure and indicate the nature of expenditure on a scheme or activity or organization in terms of inputs such as salaries, office expenditure, loans, investment, etc. They constitute the primary units of appropriation for the purpose of the demands for grants of the government. The introduction of any major head or minor head as well as abolition or change, etc., of any existing head shall require the approval of the CAG, who will obtain the approval of the President wherever it's necessary. Expenditure can be classified into charged or as voted. Expenditure which are under the provisions of Constitution is subject to the vote of legislation shall be shown in the accounts separately from expenditure which is charged on Consolidated Fund of India or State Union Territory. The word form used in the Article 150 has a comprehensive meaning so as to include the prescription not only of the broad form in which accounts are to be kept, but also appropriate heads under which certain transactions or classes of transactions had to be entered. What do you mean by the general principles of classification? As a general rule, the classification of transaction in government accounts shall have closer reference to the function, program, activity, activity of the government and the object of the revenue or expenditure rather than department in which revenue or expenditure occurs. Under general principles of allocation of expenditure between the capital and revenue, the guiding principles of allocation of expenditure between capital and revenue are like expenditure of a capital nature should broadly be defined as expenditure incurred with the object of either increasing concrete asset and permanent character or extinguishing or reducing recurring liabilities. Expenditure by government on grant in aid to local bodies or institutions for the purpose of creating assets which will belong to these local bodies or institution cannot legitimately be considered as capital expenditure. Expenditure on temporary assets cannot be ordinarily considered as expenditure of capital nature. But expenditure of capital nature shall be distinguished from revenue expenditure both in budget estimates and in government accounts subject to the principles laid under Article 43. Capital should bear all charges for the first construction and equipments of a project as well as the charges of intermediate maintenance of work. It should also bear charges for further addition, improvement, as may be sanctioned under rules made by the competent authority. Revenue should bear all consequent charges for maintenance and all working expenses. These embrace all expenditure on the working and upkeep of the project and also no such renewals and replacement as such additions, improvements, extensions as under the rule made by the government or debitable to the revenue account. In the case of works of renewal and replacement which partake both of capital and revenue nature, the allocation of expenditure should be regulated by the broad principle that revenue should be or provide fund for the adequate replacement of all wastages or depreciation of a property. Now let's see what are the important general orders governing classification. First is First let's discuss the pay and allowance. So here the pay and allowance doesn't include the travelling allowances of government servants. And as per the principles in Article 30, the pay and allowances of government servants shall be classified in accounts as part of the scheme activity or organization under a program below a function. The transit pay and allowance of government servant proceeding to join an office, whether on first appointment, on transfer, either permanently or temporary measure, or on reversion from one department to another, should, in the absence of special orders to the contrary, be debited to the office to which he is proceeding. This, this principle shall apply even in cases where government servants take leave either before joining the borrowing department or before rejoining the lending department, and shall hold, in respect of joining, time admissible under the service rule applicable to him. The transit pay and allowance of the officers belonging to Indian Foreign Services and Indian Foreign Service in respect to their return journey from abroad shall be debited to the budget grant of the Ministry of External Affairs. Under the local ruling, under Article 31, the leave allowances of an officer transferred from one department to another while on privileged leave on average earned leave are from the date of the order of the transfer charged to the new department. When an officer is transferred to another department while on long leave, the transfer does not take effect until he joins his new appointments. Washing allowance paid to class 4 government shall be classified under salaries. What now we'll see what is traveling allowance. The traveling allowances expenses of a government servant shall, on whatever duty he may be employed, be debited to the same head as of his pay. There are certain cases where the traveling expenses may be debited to a head different from that to which his pay is debited. Like in cases where government service servant is required to travel on duty connected with an outside body or fund, when government considers it necessary to show separately the cost of special services, and in cases where it is covered by general or special order of government authorizing a deviation from the general rule. As per the local rulings under Article 32, the travel allowances of an officer paid from the local fund may, when travelling in execution of government duty, be paid and charged to general revenue. Similarly, the travelling allowance of an officer paid from the general revenue when travelling on duty connected with the local fund may be charged to the local fund. The travelling allowance and daily allowance paid to the officers of state government appointed as members of committee and commissions set up by the government of India are governed by the state rules but borne by the central government. An officer of government required to attend meetings or for doing other works in connection with the affairs of statutory organization, corporate bodies, commercial undertaking, etc., shall claim travelling allowances and daily allowances according to travelling allowance rules of government.